gonna record this, okay? This is good.
All right.
Okay, so waiver of premium is if you become disabled, then our company, the insurance company, will wait for 6 months until this benefit kicks in. So when does it kick in? After 6 months, the company's gonna waive the premiums. That's what waiver of premium means, but it's because of disability, okay? So it's called waiver of premium, but it should really be called disability waiver of premium. Disability waiver of premium, because it's activated when you have a disability. So when you have a disability, you have to have it for more than 6 months, and then the company waives the premium. So that means you got pretty much what it means is that you have free insurance. And when you have free insurance, you don't pay as long as you're on the same disability.
So the answer is A, reinstatement provision.
Yep.
Because when you see a policy provision, it's the reinstatement provision.
Well, wait. Right here, it's talking about an insured will be allowed to reactivate her lapse policy. So when you reactivate something, you're reinstating it. You have to reinstate it. Okay.
So
It
the
was
answer is
stated, but now
A.
you have to reinstate it because it lapsed. Does that make sense?
Yeah. Now it does. Now I'll get it right on the test.
Okay, now watch. Now watch. C is grace period. That's obviously the wrong answer, but what is grace period?
A grace period is like where they have like 10 or 30 days or something like that.
Yes, ma'am, but why? Tell me more. Tell me more. No, actually, you're wrong. Sorry, that's the free look period. You're thinking of the free look period. You see, Vanessa, this is how you gotta master the vocabulary, bro. You gotta master what each concept is so that you don't get it confused, because on the test, it's gonna scramble your brain in the test because you don't understand the main concepts, okay? So what is grace period? Go for it. And by the way, anybody that's listening to this on the replay link, this is why you have to make some time to study with me, because I'm gonna clear a lot of things up that are not straight in your head. So that when you take the test, it's like, whoa, okay, now they could bring it at you. Now you're with confidence. Now you're like, come on, bring it, exam, because I know the concept, and it doesn't matter how they throw it at you. I'm gonna get it right because I know what it means. So now you know what free look period, what waiver premium means, because I just explained it to you. Now you know what reinstatement means. But now let's keep going, right? Let's not go to the next question. Right here, we have a concept that we need to master, which is grace period. So what is grace period?
I don't know. I forgot that
Okay,
one.
so think of this, okay? Think of this. Where's, like, if you're a Christian, right? If you're a Christian, you're saved by grace. Grace means you don't get what you deserve. You don't get what you deserve. So if you don't make a payment, what should happen with the policy?
If you don't, it cancels?
It lapses, yeah, but let's use words in the test. It lapses. If you don't make a payment, your policy lapses, right?
Yeah.
But that's what you deserve. But grace means you get what you don't deserve. Sorry, you don't get what you deserve. So the policy should lapse. So that's what you deserve. But grace period means you don't get what you deserve. So in other words, even though the policy should lapse, it doesn't lapse. They give you a 60-day grace period.
60-day period.
So that means your policy your policy should be lapsed, but they give you a grace period of 60 days to make up your payments so that it doesn't lapse. So for 60 days, you could be behind 60 days. And if you die, you haven't made a payment. But if you die, the company pays because it's a 60-day grace period. Got it?
Yeah. I'm writing it down.
All right. Yeah, write it down, write it down. And I'm recording this so you can watch this on the replay. And guys, you gotta understand this concepts because this is how you pass the test. If you go into the test not understanding these main big concepts, dude, they could throw 4 or 5 questions at you. You're gonna get them all wrong because you don't even know what grace period means, right? What waiver of premium means, what reinstatements, you know, what the thrift savings clause, right? The spendthrift clause. I mean, all these concepts that we're learning. So hold on. That's another thing, okay? What I want you to do is always read the rationale. That's a good habit that you wanna build. All right, is always read the rationale because the rationale explains to you what what I'm explaining to you. The rationale explains it to you a little different, but still is good to read it so that you could understand what it is. You have to understand it. You always read the rationale. Never skip it to the next one. Always build a good habit, okay, Vanessa? A good habit is always read the rationale. If it's boring, if it's getting you sleepy, if it gets you sleepy or tired because you're reading, then do it while you're walking. Okay? That's the solution. If you walk while you read, you'll never be sleepy because your legs are moving and your body's flowing and you don't get tired and you don't get sleepy if you study while you walk. Okay? So if you're the type that gets sleepy and tired while you're studying, then walk while you study and boom, it's gonna help you. All righty?
All right.
Let's go to number 4. Let's go.
Okay, a fee charged to the
Yeah,
insured
go
when a
ahead.
policy or annuity is exchanged for its cash value is. Wait, I know this one. Let me see. Hold on. I know this one because I studied it. Let's see.
You better not drop it in the bed. You try it.
Isn't it surrender charge?
Yes, ma'am. It's surrender charge.
Yeah.
That's right. That's right. Yeah, that's right. Surrender
Got
charge.
it.
Let's read the rationale.
All right. When a
Read the
policy
rationale.
surrendered in exchange for its cash value, a surrender fee is assessed.
It's assessed. Okay.
That's assessed, yeah.
So look, surrender charge is a powerful word. It's a powerful vocabulary word because that's going to be on the test. Okay? Check it out. Surrender charge applies not only to life insurance, but it applies to annuities. Okay? If you cancel your policy early, if you cancel your policy prematurely, that's what it's called, surrendering, right? I surrender my policy to you, insurance company, right? You're surrendering it. That's what it means. It's canceling. So if you surrender your life insurance policy, then guess what? You are going to pay a surrender charge. All righty? So if you pay a surrender charge, you're going to lose some money. You're not going to get all your money back.
Number 5, it says all of the followings are non-forfeit options except C, cash surrender.
Okay, all of the following are non-forfeiture options. Okay, so there's only 3 non-forfeiture options. What are they, Vanessa?
Extended
3.
term, cash
Yep.
surrender, and interest.
No. The last one is not interest. Okay, the last one is actually reduced paid up. So you gotta remember this, okay? There's 3 non-forfeiture options. What are they?
Extended term, interest only, reduced.
No, not interest. Not interest only.
No, sorry. Extended term, cash, and reduced.
Yep, reduced paid up. So, okay, so now, good. So now that you know that, Now they could throw this question at you on the test and you'll get it right. All right, now look. What is a non-forfeiture option? What is a non-forfeiture option?
Which one?
What is it? What does it mean
Oh, it's
when I say
extended term, cash surrender,
no,
and
no, no, no,
reduced
no?
speed up.
No, those are the three non-forfeiture options, but that's not what I'm asking. What I'm asking is, what is a non-forfeiture option? What is a non-forfeiture option?
Extended term.
Nope. Nope. Okay, so I'm gonna tell you now what it is. You ready?
Yeah.
So a non-forfeiture option, think of it this way. It's when you have a policy that has cash value. So this is how it works, okay? A non-forfeiture option is when you have a policy that has cash value.
That's what I said. You said no the first time. I said cash surrender the first time.
No, I didn't say surrender. Surrender was a previous question. Surrender charge was a previous question. I'm talking about non-forfeiture option. Okay.
That's when you have a
So
policy in place.
is when you have a policy that has cash value and you can no and you're broke and you can no longer make payments. Okay, so that's the scenario. You ready? And you
Yeah.
say, oh, insurance company, you call the insurance company and you say, hey, I don't want to forfeit my policy. I don't want to forfeit my policy. What does forfeit mean? What does forfeit?
I don't know. That's
Okay,
why
so
I
when
didn't
you
get that one right on the test.
okay, good, man, you're gonna get it right now from now on. Okay.
Okay.
Forfeit means when you go to a game and you tell the other team, hey, look, we cancel the game. We're not even going to show up. Just we forfeit the game. That's what forfeit means. So forfeit means you lose. You lose it. But in this word says non-forfeiture option. What does that mean? That means that you don't want to forfeit the policy. So you don't want to lose it, but you're broke. You can't make payments no more. You're broke. So the insurance company says, all right, Vanessa, I got 3 non-forfeiture options for you. The first one is just cancel the policy and get your cash value, right?
Yeah.
Which is cash surrender.
Yeah.
Or we could do extended term non-forfeiture option, which is this. Extended term, we're going to keep the same coverage, but you're going to get it where you but it's only going to be term insurance. Now you're going to get it less than age 100. Less than age 100.
Less than age 100.
Okay, so that's extended term non-forfeiture option. It's going to be an option that surrenders that you keep the policy active. You use your cash value to pay for the policy. It's going to be the full coverage. The coverage is going to stay the same, but the policy is not going to go to age 100 now. It's going to go till less than age 100. Okay, so that's number one. So that's extended term non-forfeiture option. Reduced paid up non-forfeiture option is reduced paid up works like this. You were going to reduce your coverage a little bit, but now it's going to be paid up. So paid up means that it's till age 100. So it's reduced coverage, but till age 100. Reduces the coverage till age 100. Reduces the coverage till age 100. That's called the reduced paid up. Got it?
Yeah.
Any questions?
No, that sounds about right. Now I could get it right on the test.
Yep, that's right. That's right.
So all of the following are non-forfeit options except B, interest.
Yep, the answer is B. Read the rationale.
It says non-forfeit values include cash surrender, extended term, and reduced paid up interest only in the settlement option.
That's crazy. Yep, you got it.
Yep.
Next one. Let's go.
Okay, it says according to the entire contract provision, a policy must contain a declaration page with a summary of insured, B listing of the insured's former insured for inconstability provision, C buyer's guide to life insurance, or D a copy of the original application for insurance. Insurance. Yeah. Mm.
This is on the former insured. No copy of the original application for insurance. D. The answer is D.
D, yeah. A copy of the original application for insured.
Yeah, this one you just have to understand that, and there's really nothing I could teach you on that. So
Okay.
let's go to the next one.
It says an insurance contract must contain a copy of the original application.
Yup.
See, I got that one right on the test. In
That's right.
insurance, in insurance, purchase a life insurance policy on on his life, naming his wife as a primary beneficiary and his daughter as contingent beneficiary. Under what circumstances could the daughter collect the death benefits?
The other side. The
It
other
says
side.
it says A, when the insured dies, the primary and contingent beneficiary share death benefits equally. B, if the insurance dies from an accident means. C,
The
if
other
the
side.
primary huh?
No, I'm talking to my daughter. She's not listening.
Uh, and then D, when the primary beneficiary's written consent.
Yeah, Vanessa, I'm gonna have to stop early. Stop the study now.
Okay,
Pero we gotta you I need you to watch the videos where I talk about the vocabulary words. Okay,
okay,
these videos are exclusive. You know, if you want a copy of these videos, este just just fill up the form that's on the link of this video,
uh-huh.
and I'll send you those videos. But you have access to them. I'm gonna send you a text message right now. Okay.
Okay, I will. All right, thanks, Raul.
All right.
Goodbye.